Hello, everybody. So, of course, today I have to talk about the Powell speech, the Fed speech, and the rate cut. And my feeling is it was pretty darn hawkish. I found it hawkish. Halloween is early. He didn't want to cut. The tone of his voice, the way he speaks, it was like, yeah, the job market is strong, but I guess we've seen a little change. Yeah, tariffs are going to be a problem. They're going to raise prices. There's so much negativity. And the leading question from the journalists, appealing to more negativity, that didn't help. I found him to be pretty hawkish. He continues to insist when the job market is fine. He continues to insist that. But when he says, I suppose it's up a little bit, he continues to insist that tariffs will lead to inflation. Yet it's true that earnings in the S&P are doing really, really well. And frankly, I listen to a lot of conference calls. Many of the companies I invest in own goods that they ship from China and Europe, and they're not planning on passing the entire cost to the customer. Sometimes they raise a little bit the price, but they can't raise the price by the amount of the tariffs. It's not possible. It's manufacturer concessions oftentimes. It's margin concessions. There's a lot of things, and they have stock. Companies have had a lot of stock. They've been anticipating a lot of things. Companies are dynamic. They're not going to raise. It's Keynesian philosophy. It's Keynesian economics philosophy to assume something so simple that you get a 15% tariff, but you're going to raise your prices 15%. It is much more nuanced. It is a three or four-pronged solution, of which a big part of that solution, especially when it comes to China, is currency devaluation. Nobody ever talks about that, so clearly he's picking on tariffs and continues to insist that. And he was reluctant in cutting the rates. Then, I still have a hard time, figuring out how I feel about him calling youth unemployment interesting. Actually, it's a catastrophe. Actually, a lot of young people can't find jobs right now because, of course, AI is attacking the entry-level positions first. And this is a real thing. And he finds it interesting. I don't find that interesting at all. I hope this youth, who, by the way, owns a lot of crypto, I hope this youth will find it perhaps interesting in 30 years to find out that capital has shifted to digital native assets and people like Powell don't own any, right? I hope this youth will also find it interesting. This is not interesting. Like, come on. Anyways, and like you say, people are taking longer to respond to survey and send surveys back. Hello, companies don't use surveys anymore. Like this is entirely a thing out of the past. Like is Powell living in the past? Like he thinks you send a little survey, you put a dollar bill, and then they mail it back because you gave a dollar bill. Surveys are on their way out. Marketing science has entirely evolved. Today you do sentiment analysis. Today you use AI to actually know what's going on in the real world. Why do these hundreds of PhDs still use surveys? Well, you know what? That's because that part of the education system is entirely outdated, and you still learn things on surveys and Likert scales and all that crazy stuff that the actual real world doesn't use anymore. So, yeah, I found it pretty hawkish. What I found even more hawkish was what they call the dot plot, right? This weird, it's not weird, but whatever, it's the chart. They anticipate 3 rate cuts of 25 basis points in 2025, two more to come, right? So there should be 2 more cuts to come. So 3 cuts, 75 basis points. And this, if you read this chart, 26 and 27, it's telegraphing perhaps 1 more cut of 25 basis points in 2026, and then longer run nothing. So longer run, we're going to have a Fed fund rates 3% or a little higher than 3%. Is this really what they're telling us? Like 3.25%? Yeah, I got news for Powell. That can't happen. If that happens, the governments will never be able to refinance the deficit. And the zombie companies, by the way, will also not be able to refinance their debt. And if you look at the S&P 500 companies, the number out there who have debt that's underwater, many banks too, by the way, many insurance companies, local governments, same boat, households in the same boat, right? With households, especially with real estate and mortgages, we're gonna start to see some real crack in the real estate market, because a lot of people were like, okay, well, I'm gonna buy a 7% mortgage. I'm going to buy a house with a 7% mortgage, hoping the rates eventually cut, because he has to cut, right? And if he doesn't cut, those households will find out that they bought a house they couldn't afford. Because, anyways, this can't be. This can't be. Just like economically, like unless you want the system to collapse, this cannot be. And I'm not really a macro channel. I talk more about stocks and individual stories, but this is very, very clear to me that this is what the reality will look like. It's like probably we're going to be doing very well in 27 and in the longer run. But eventually these plots will fall to zero, and I think that's going to be much sooner than the Fed says. And the hawkishness of today, I think the market is more and more going to start dismissing that as the glorious month of May 2026 approaches, where Mr. Dove, which is going to be the name of a new chair, he's going to be named Mr. Dove. He's going to replace Powell, and we're going to have a much better time then. So anyways, how did the markets react today? Well, another day for nothing. Another day for nothing. Okay, yeah, you had huge volatility in the middle of the day, market excited, then market sad, then market going back to where it got started. So really a day for nothing. The big crash that many were telegraphing on the internet, on XNL, that didn't happen. We at the end of the day, you look at the open, you look at the close. We had a boring day. Same for Bitcoin. We had a boring day. Of course, Bitcoin as usual. And this is part of what I was saying about Gen Z not finding job. Well, maybe we shouldn't worry about Gen Z, because they're using Web3, and maybe the nature of jobs is going to change entirely, because they're going to own the assets of the future. And TradFi Rails doesn't get to participate. This is a silly thing, but over and over again, Bitcoin reaches all-time high. So people who do perps and all that sort of stuff, they can benefit in trading hours. The best price action often happens outside of TradFi Rails. So once again, this is going to change. All of this is going to change. Better probably to operate in a world, and this is this transitionary phase, but better probably to operate in a world that doesn't operate on U.S. monetary policy, but that operates on a Bitcoin standard, hopefully at some point. And if not a Bitcoin standard, some sort of a hard asset, hard internet money, whichever it is, but one that is governed by code and not one that is governed by frankly, I don't know what the committee is thinking. It's bluff. They're keeping the bluff going. It's about saving face, right? I don't even know. Oh yeah, he also said in the call, he said, "Oh, we've been doing a great job so far." He said that at one point. I don't know if you caught that. He said, "Oh, we've been doing a great job so far." Oh my goodness. Anyways, that's what he said. Anyways, my take, he had a very low conviction in this cut. He didn't want to do the cut. That's how I feel. I felt like he was pretty hawkish, but that's all not going to matter, and the market is going to start pricing in May 2026. The market usually only starts to see things about 6 months before they happen, and I think the big cuts, those, or at least a really good pace of cuts. Like, could we get a pace of, maybe one time 25 basis point, another month 50, another month 25, another month 50. I think that's going to come after May 26, when Mr. Dove, here's a picture of him right here, when Mr. Dove is going to be the new chair of the Fed, or Mrs. Dove. I don't really care. It's going to be a Dove. It is going to be a Dove. That's who it's going to be. Anyways, markets should be very happy in anticipation of a dovish Fed chair. Interest rates are like gravity when they're high. It brings everything down, and even though markets are at an all-time high, the interest rates are high right now. Imagine when the interest rates drop, what's going to happen to growth stocks, what's going to happen to Bitcoin, what's going to happen to the markets, what's going to happen to everything I cover on this channel. It's going to get even better. So I'm so excited about the coming years. Early 2026, we may have rumors, or we may even have a name. I don't know. The administration is pretty in a hurry of finding someone. So as soon as you have the name, people will realize, oh, this person will be the new chair. They'll be very, very dovish. And that will make our markets pump. And I'm very happy about that. The new chair will be Mr. Dove. And hypergrowth will make a quick comeback. That's what I see. And of course, the only problem, which I think is still going to persist in 26, is going to be real estate, right? That's still going to be a problem because it takes a while for rate cuts, and even if you're looking at the 30-year or the 10-year in the market, it still is correlated with the overnight Fed funds rate. It's still everything correlated. In my view, it's still going to take a little while for this to trickle down into real estate, and so. In my view, real estate probably makes a comeback in 26 because those big rate cuts that we're going to get after May 2026, they will take, maybe 8 months, maybe a year for them to really hit the real economy and really help out the home sellers, the home buyers, right? Both people will be helped out. So the problem of real estate is transaction count. There's not enough transactions, and help out also the job market for those folks who want a regular traditional 9 to 5. It will help them out. I don't find youth unemployment interesting at all. I think it sucks. But anyways, this was not investment advice, not financial advice, only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.